Nigerian Tier 3 banks are being urged to pursue mergers or downgrade their licenses as they struggle to meet the Central Bank of Nigeria's new capital requirements, according to a rating firm. In a not-so-related development, Landmark ruling has settled the ownership structure debate on Keystone Bank. Now, the Nigerian government has taken full control of the financial institution, and this development marks a major turning point for Keystone Bank, which had already undergone significant changes since the Central Bank of Nigeria dissolved its previous board and management in January. We're joined by Ayokunle Olubomi, Head of Financial Institutions Ratings at Augusto & Company, for this. Thank you so much for joining us.
Good morning.
It's a pleasure having you around. So what are the key challenges, according to the way you see it, preventing three-tiered banks in Nigeria from meeting the new CBN capital requirements?
Okay, thank you. I think, first of all, by the beginning of this recapitalization exercise last year, March, it is estimated that about 4 trillion naira will be needed by the industry. And currently, about 2 trillion has been raised, and about half of it has actually been raised now, majorly by the Tier 1 banks, and to an extent, Tier 2 banks, and minorly by the Tier 3 banks. For the Tier 3 banks, I think we are just being too. I don't think the concern and even the concern is actually even the east that has generated is not that much, because if you look at the Tier 3 banks, a lot of them, they comprise only about less than 5% of the industry total assets. And if you look at those areas, you have the non-interest banks, you have the merchant banks, where their capital requirement is not as high as the large banks. Having said that, what are the key challenges affecting some of these banks from meeting the recapitalization target of the CBN? First has to be the limited track record. Because if you look at the Tier 3 banks, some of them were just licensed in the last 5 years. Some of them, based on that, they've not really had enough track record to be able to attract new investors. Similarly, some of these banks are also closely held banks, right? Unlike the Tier 1 banks and some Tier 2 banks that have broad shareholding that are listed. Some of them are just owned by group of firms and just one or two entities, right, actually even own them. So that one can actually even be a challenge in raising those capital. Although what we've seen is that we've seen willingness of some of these banks to expand their shareholding. We see the willingness of some shareholders to even say that, look, okay, we don't even mind others joining us. And some are, just one or two of them are actually even looking at mergers and acquisition. And then lastly, what I would say also is that some of them are under regulatory intervention, either CBN dissolving their management board, or even some of them have negative capital and even operating with the CBN forbearance. That could also be an impediment in meeting the capital raising target of the CBN.
Okay, so then will mergers and acquisitions among these banks strengthen Nigeria's banking sector? And for those who fail to meet the recapitalization quota, is there a possibility that their licenses could be downgraded too?
Okay. Now, if we take let's take a step backward and look at the last recapitalization exercise that we had in 2003 up to 2005, you'll notice that then from about 90 banks that we had, after the exercise, the number of banks shrank to about 24 banks that we had. And we could say that it's not only that didn't lead to instability in the industry, it actually even strengthened the banks. The banks were bigger, they could handle bigger transactions, they were supporting more businesses, both in Nigeria and also even abroad. Right. So we believe that recapitalization will strengthen the banks, right? It will make them even stronger. I'm talking about the downgrade. And like I said earlier, okay, now if we want to look at those banks, the non-interest banks, a lot of them don't have issues because normally the target is 20 billion for the minimum paid-up capital, and most of them have either surpassed it or they've already raised the capital and waiting regulatory approval. For the merchant banks, the funds that they need to raise here, they are not quite much, right? Where you can have issues will actually be some of the national banks. And if you look at the national bank, like I said earlier, except for one or two of them that are under regulatory intervention. And I think it's about one or two of them that we are concerned about. I think most of them will actually even meet. According to their plan, a lot of them are still on track to meet the target of the CBN. Although I would say that between now and then is a 12 months is a long period in capital raising. A lot of things can go wrong. A lot of things can actually even still go right. But having said that, I won't actually even say that it's not possible that we have one or two tango. Even albeit even is going to be temporal, right? Just to be able to get more confidence and raise the capital, raise the required capital. And we don't also see, it's also possible that some of them can even get some forbearance from the CBN, maybe for a year or two, depending on how the CBN approach. They can approach the CBN saying that, can you give us some extra time to be able to even meet this requirement? Right, that one is also possible for the banks.
Okay, so let's look at the issue with Keystone Bank. Did the takeover of the bank by the Nigerian government come to you as a surprise?
I would say that is not surprising because, like you said earlier, the introduction, right? The CBN dissolved the management and the board in January last year, and over the last 1 year, the question has been, who are the shareholders of the bank? Is the bank owned by the CBN or is it owned by the Itato management, the Itato shareholders? So that interaction has actually been there. But these actually even put to rest, right? Although without prejudice to probably the judgment, the court's ruling is actually it may actually be appealed. It can be appealed, right? Without prejudice to any appeal, right? It's not surprising, right? And these actually even give clarity on who owns the bank.
Yeah. And this actually brings to perspective that the takeover was the subject of a probe by a special investigation panel said to be scrutinizing the activities of the former CBN governor, Godwin Emefiele, and the ex-AMCON boss. Some people see it as a perfect revenge by government. Do you also see it that way?
Not really, because, before we can even pass judgment, we need to have all the information, right? Because if before we can even say, I need to have all the information. Unfortunately, we don't really have all the full picture, right, about what transpired, right, among the parties involved. So it would be difficult to say now that, look, okay, this is actually a witch hunt or this is going to be very difficult to say that because we don't have the full picture. We don't have all the information regarding this particular transaction.
All right, before we draw this to a close, I'd like to quickly ask you what you think would be the fortune of Keystone Bank now. Is there a possibility that with the federal government's takeover, it could control it by itself or probably, sell it off or probably restructure it? I'd like to know who might be handling these projects from this point.
I think this decision that we have is actually good news to Keystone, right? Because now they know who the primary shareholder is. Because I'm sure when we're talking about recapitalization, the stakeholders will be thinking that, look, both the management, the staff, and even some of their customers will be thinking, who will recapitalize this bank? Now it's now clear that it's now owned by the federal government, right? Now that it's owned by the federal government through the CBN can now even make a decision. Do they want to recapitalize the bank? Do they want to appoint advisors and then to sell off the bank? Right? Do they want to give them some extension, right? Some extension in terms of recapitalization. Now it's now clear, right, on who is responsible for the bank, who owns the bank, right? And then they now know who's tabled, right, the box stops in terms of ownership of the bank.
All right, thank you so much, Ayokunle Olubunmi, Head Financial Institutions Ratings as Augusto and Company, for sharing your insights with us.